Good morning, traders. This is Alex with the Matrix program. We're on our X account, or kind of our standard intro. CBOT Man 33 is my handle. I did upload what we're just going to be talking about for reference on the my X account. Let's go directly to the Matrix program itself. Okay, you can see this is. We did have some trades since it's been what, I don't know, 10 days, 20 days, 15, I don't know, whatever. It's been a while since I updated the last video. We did have a trade in corn, I believe in wheat, definitely sugar was a recent one, and I believe crude oil was also. Again, all those were on the verge. Crude oil right now, basis the equinox, December 21st close of the crude is up 62%. Now that's off its highs, right? It had a pretty good pop and a drop, typical chippy chop crap that goes on. Beans increased a little bit from our previous video. Cattle made new highs. Silver is kind of in the middle of no man's land. S&P up 6% since the basically equinox, the end of the year. So pretty good increase there for a high market. Nat gas is back basically steady Eddie. Let's go to the actual corn chart. Again, some of these, we're up against a high, just such a narrow band. We got spun. Actually, here was where we got, I didn't mark it correctly, but this is where we officially got long with our now stop under the low. Again, I used 3 boxes, right? So basically this is our 3 boxes. This one's current and it's not relevant. So again, this is where the stop is on this 3rd box. So a next moon period, which will be May 9th. Let me see, May 9th is a Saturday. So, obviously May 8th will be our close. Again, these quarter moons happen to fall now on the weekend. So activity tends to increase. We are coming upon the next moon period, which is the Gann's important zone, right, which is the 90 degrees from the solar eclipse, right? That's where he projected all his big bulls. That's where the matrix evolved, right? Because I did a lot of research into WD Gann's trades and found out that's what he did. So that's what I did. I used market days originally, and now since I've retired as a commodity broker, I now use quarter moons because it's a little more easier for me. Anyway, and a square 9 of price, pretty standard stuff. Now again, corn can get going. Usually it takes some weather. Usually you don't be short typically corn or beans, unless you got to because of hedging or something. I just don't like being short corn, especially on these. This is a dud, right? If you look, once we look through the spot charts, this is pretty much a dud. I just don't like selling sleeping markets during their powerful periods. No different than trying to be short nat gas in February. I mean, you just don't do it. So that's just kind of the same principle here. You just, if nothing else, stay out, right? If you're a bear only. You wait for those weather pops that do come along the way. Here's the beans. Again, our stop got moved up a little bit. We have not got stopped out of this one, and it's up near its higher close, kind of up against that resistance. Here's the wheat. This is when we got stopped out here, got spun, chopped out here. Now we had a good profit, right? But again, wheats tend to be a little trickier. And again, I'm not a big fan of being long wheat and expecting some big bull market in the month of May, June, or July. I would prefer not to, and for me, I just stay out. Now, if you did buy stuff in here, right? I mean, obviously you'd be looking at an exit point somewhere, whether, stops or buying puts, that kind of thing. Here's the meal, just a chopper, nothing to say. Now, eventually, right, these swings, highs or lows, right, will be the potential catalyst because, you're in this quiet market, right? So it could be bearish. I mean, you don't know which direction, and I'm just nothing there to report on. Here's coffee, kind of getting coagulated here in some type of coil pattern. The eclipse was low, kind of stringing out, so basically it's a sideways chop into the halfway point, right, which is again the 90 degrees. Here's cotton, one of the bullies, and we've been reporting on this to buy the minor dips. Can't really see much on this chart because it's too slow, but made new highs, 2 periods. Last time I reported it was here, and now made new high. So again, the speed of the incline is definitely pretty pumpy. Now our stop is way the hell down here, so obviously not probably a good. I'd rather buy a put than put a stop way down here. Here's sugar. We talked about this. Again, 3rd bottom. Now, I think it could make a new low, but obviously not anymore. I was talking about definitely buying a power dip. Still as a play is the out of the money options, right? So buying 1,700 October calls, quantity over quality. I'll kind of look through, because I think I reported that it was like 30 cents. We could have bought 8 of them for $2,600. We'll get into that once we get into the futures bar chart stuff. Again, just a orange juice in this huge ass chop, but it's huge. I mean, it doesn't look like much, but dollar amount wise, that's pretty big. Here's the crude. This is one of the, again, I didn't like our stop here. But you got to put it somewhere. Basis this actual systematic approach, right? Again, it's faster than, you can't trade on a 3/4 moon period when it's moving around 20 grand in a day or 10 grand in a day, right? I mean, it doesn't make sense, but This is longer term kind of view, right? And the trend is definitely it's up, and we had a collapse. Now we're mid-range, kind of back to where we got stopped in. This is a 1x2, this red dotted line. And so again, kind of in that, it isn't really Gann's cardinal cross, but this is a new one now since we made a high. This cardinal cross area is support, and we just missed it on this breakback. So it makes sense a little bit. Again, I'm just not a fan of, you know, if you're a trader, okay, fine, right? If you're in there quick, get out quick, a few day trades is fine. It's tough to trade at $12,000 margins. Here's nat gas. Again, the dog with fleas is still short. Stops are now moved down to here, so we're actually profitable a little bit. I definitely think since we made new highs up here both times, I think we're going to make lows down here at some point. When, I don't know, right? But, and again, you kind of, I'm getting off track a little here, but this low to high was 34. Again, I like 33, or excuse me, 9. 34 is the height. 33, I really like. But anyway, I want to get on that train. But 9 bars, right, or 9 boxes. There's 9 right here. So from this low to this high was 9 of these bars or boxes. So 9 to here is the cycle basically of this low to high. Anyway, so it's right in here is kind of the area of, again, as a time trader, and if I'm interested in buying it or something, I would definitely, if we make new lows next moon period, I'd be kind of pumped as a trader. Here is E-mini S&P, again, the Trump effect's in full bloom. Everything he said he was going to do when he was a youngster is coming true, cleaning out the deep state, in his opinion. So, again, we're long from here. Our stops are still at a loss. Again, not where I would trade it, but again, if you're going to use something like that, this is a huge amount of risk to get stopped out. It really sucked to lose all that back, right? Because we're profitable, not to the stop, but current value on the highs. You can see we're kind of squaring out of this. I guess you call it a parallel channel, right? Which is mathematical, right? A 1 by 1. 1 moon over to 1 square 9 up. This channel. Now, of course, you could also, if you're a bull, right? You super bull. This is kind of the area where it could go to as resistance on some type of pop deal, 7504-ish. So this week, right? So next week it'll be 1 notch higher because, again, it's a 1 to 1. Now, this low is support on if you're a bull and wanting to buy a dip. It'll make sense to buy it on one of these. Probably where I get stopped out, right? Would make sense a little bit. This is where our stop will be next moon period. And it makes sense that we could get stopped out and just chippity chop to death because we're too slow on our speed. Anyway, we'll move on. Here's the euro, kind of, again, nothingness. I like the swing. So out of the money calls are possible. Here is gold, again, up against the 1 to 1. Just enough, really nothing to talk about. I mean, it looks big from day to day because you're looking at percentages, right? Which is not what you really want to look at. Gold currently, this is 10 o'clock on a Wednesday morning on May 6th, 2026. So gold is currently up 143, 3.15% at 47.12. Silver is up 6% at 70. We'll call it 78-ish. So again, just kind of gave up what it's lost. No big deal. We can see how crucial this is. Our stop got pulled down, which it doesn't make sense to me. Why would you keep it above the swing? But anyway, that's where it is, basis the systematic approach. You can see the squaring out from the low was this pivot. So this pivot is pretty key. And again, I drew in, I think these are new. I drew in, this is a 1 by 1, right? A 2 by 1 would be over here somewhere. This is a 1 by 2, right? So 1 box up in, 1 box over in time, which is our square or moons. And then 2 boxes over in price. So again, a 2 to 1. Now I could increase the speed and it'd be the same thing. That's why you always want to, when you create a chart, you always want to keep it mathematical. 1, 2, 4, 8, 16, 32, 64, right? You keep it mathematical in that sense. And then all the 1 to 1, whether you have it really fast, you couldn't see it, I'd be up here dicking around all the time. But these mathematicals become the same as if you had a different speed on the chart. But you can see we're kind of coagulating right into this zone. So kind of the pentacle, I guess, of the area makes sense a little bit that we're struggling here. We are short gold and currently long silver. So that's interesting for the spreaders out there. Super, 36 grand a trade of futures. The stackers are, loading up, buying, a little bit here and there. But as the futures go at $36,000 margin, which to me is a little cheap yet. Silver, I don't know what the fish. Hang on, I'm gonna go look. Okay, I pulled up. I get emails still from RJ O'Brien showing the margin sheet. They got a lot of stuff missing, but they do have gold and silver. Gold's currently 30,000. I don't know, $30,069. What the heck? Come on, man. Silver at 44,231. How do they create that number? But anyway, so it's dropped actually quite a bit. Platinum, which is a pretty small contract, 11,000, almost 12,000. Palladium at 20 grand. That hasn't changed a whole lot. So, um, yeah. But again, I'm gonna like leave it here for a second. See if they have it. S&P's at 63,000 for the big one. So yeah, I mean, it's still the S&P is still high. I mean, it has don't trade hardly at all as compared to these metals. So yeah, I don't know. Again, you got to realize that uh, stuff's pretty different. Let me hang on, I'm gonna update my chart before I forget. Okay, let me see. Silver 44,231. What the, come on. So 30,069. So yeah, I mean, again, I keep track of the total. Of course, Bitcoin's pretty freaking high because I don't basis the futures. I don't even know what the margin is, but yeah, I got it S&P at 16,000. So again, and I don't trade. I mean, percentage-wise, it don't move. It's up 9% to the volatility of the stock. All right, let me get back to where I'm going here. Gold. No, we were on silver. Okay. So anyway, you can see the silver here is, kind of made a trappy area here. So again, we don't know if this is a high yet. You can see some of the problems. I did draw in this faster 2x1 speed, right? 2 square or moon periods over for 1 square of 9 down, right? A 2x1. So this is kind of the cross area. Not really a cardinal cross, but it's a cross area as well as here. And this is squaring out of that range, right? So, which comes around the end of the month. And what else do we know? We know that we'll get into that hopefully if I remember. I want to look at this date because again, we'll kind of look through that real quick, why that's important every month. So let's go to the cattle, new highs again. You can see, again, I'm trading December, so I kind of made these April ones. Again, when I do the charts, you see April is represented by the symbol, right, which is J. I'm trading December right now, which makes sense a little bit that it's a Z. But you can see the spot chart and the deferred, which is this one, has also made new highs, and we'll look at that here as we get through the daily charts. But the stops are down here, still at a loss. But again, makes sense a little bit. We just keep creeping. Again, little, unless there's a spinning cow out in the field somewhere and you get a mad cow report, which I remember quite distinctly at Christmas time one year. Poof, down she went and dropped 20 bucks in a limit deal. Here's Bitcoin, again, a creeper, right? Making new highs. We talked about going up here and covering this close. I'll be kind of bullish Bitcoin if we can close, let's say a couple times above this gap, right? This is what I call the money bar, right? This is where a lot of people made money or lost money. If you think of Bitcoin as a currency, this slow reaction back up and another big smash could occur, right? I mean, that's kind of tendency that it has. All right, now I'm going to move on to the daily charts of bar chart. Hang on. Okay, going to bar chart again. I created a watch list, and then you hit this flip chart button, and it pulls up the charts for us. Let me expand this out a little bit, so it's in your window. I'm actually going to pull this away a little bit. Okay, so this is our setup. We're going to go to the corn. Again, we're looking at the commodities. You can see nothing. I mean, the corn support down here. Tough to be a bull on corn in May. May sucks. I got it written on my calendar from the 4 or 5 decades of actually being a broker and a trader. I got May sucks. I always lose money in May if I try to be too long-termy. It's great if you're a short-term guy. You get shit that this wildly happens in May. The beans, popped out this range. Now it's back in it. Makes sense, right? Somewhere in here is a lot of business being done. This is obviously our current solar eclipse right here, right? This little arch. This day was the solar, and we've already hit it twice. So again, that makes sense of that support. If you're a bear, you probably want to look at exiting the beans down here at this previous solar eclipse as a potential. If you're a bear, and if you're a bull, right, super bull, and you're stacking soybeans, which I hate that word, you'd be down here buying all the way down to the bottom. Here is the wheat. Again, it powered up, actually made a new high. I've talked about liking this bottom. Makes sense to me, right? And again, you can see the 2 eclipses. And that's area of support, like I've said last video or 2, to be a bull in during harvest. I did take a little drive here. I live in Kansas, Salina, right in the middle of the country. The wheat is actually heading out, and actually some of it's turning. Of course, we're in a drought here locally, so we've had an inch of rain since January. Pretty toasty, and we've had some frost and weird weather and hail and everything else. So again, I got to imagine, I haven't looked, but imagine the crop census is pretty poor on wheat. just because I live in it and I know what my grass hasn't even turned. I haven't had to worry about mowing yet. So I keep, but again, it's I don't care about that, right? Again, I've traded enough to not get too bullish till you're about halfway through harvest. So when you see that, that's when you start perking up, right? Anyway, here's the meal, junk, sideways, which makes me bearish beans, right? Because meal is your biggest component. Here's the coffee, and you can see that we have this big bar down. We're back on it, basically. We've hit it, several times, and just can't go through it. And of course, here's the red one is the previous one 6 months ago, right? So 7, 8 now, I guess. But this is the kind of major more resistance. Cotton, this is the bull of bulls. Again, we talked about buying minor dips, and we had one here. We had a little one here. Kind of in as you're a bull patterns, right? Here's your flag. Here's your pennant. These continuational patterns. When you're changing from a bear to a bull, or in my mind, when you're changing from when you're undervalued, right? Which this tells me we are. You buy these minor dips because again, it's fundamentally changed for whatever reason. We don't know. I don't know. Maybe you know. I don't. So again, it's the chart's already been showing you to buy minor dips. You get a few. We've had 5 or 6 that you could bought as a trader goes. And of course, here was one actually today. You could have bought it earlier, maybe in the night session. I don't know. It looks like it opened on the highs. Again, and it closes at 2 o'clock on the Globex, I believe. So a little different than some of the other greens. Here's the sugar. We talked about this power up. Again, pretty typical. Not much to say there. So, but I think I like this pivot, man. Again, well, since we're on it, that's what I wanted to show you. I'm going to get the options from bar chart, and we're going to look at them, see where they've increased to. Because again, we were looking at them here, and I was talking about this pivot, right? Buying 1,700 calls, out of the money calls at that time for October. Let me get it. Okay, I pulled up the October options that we looked at last video. Again, I talked about quantity over quality because of the pivot, right? We looked at 1,700 calls and they were at 30 cents. Currently high today of 49. Well, it doesn't sound like much, but the money, percentage-wise, it's quite big. Let me see. Let's go to option chart, see if they show any higher yesterday. Yeah, see, it got to 70. We bought them at 30, which was the high. You can see you bought them in here somewhere. So this high is, you doubled your value, right? Again, and I'm not trying to say how great a trader I am, but I said you get out of half when you can double your money, right? So he said 8 calls, $2,600. Get out of half when you double your money. You definitely doubled your money here. Assuming you got filled because you had your order in, you got to have the order working. Good till cancel. Leave it in there, right? And you would have got filled on half of them. So now you have a free trade. Anyway, so that's kind of again it works right now. Again, I'm assuming that if we're at pivot, those other 4, the target's up above here somewhere in new highs probably. Can't get out of half more, right? You have 4 left. Get out of 2 now at 120, or something makes sense, and then leave 2 on to be a greedy SOB. All right, let me get back to what I was doing. Okay, I got it back set up. Again, the sugar chart, even though we didn't make new highs, which I was talking about, again, it's the volatility increase that you made money on. Nothing's changed except for it went up pretty fast. Again, the speed of incline makes sense, right? We're on that same designation. So we haven't really increased. Now, again, the time is important more to me than the increase. Let me see. Bar count, reply. So this is 31 bars. And this will be 31 bars from this low. If it's just a chopper and it really isn't going to be the explosive one, I would expect this to be up here somewhere by June 2nd, right? So that equals this one. Now tendency, if you're kind of in a blooming market, you either increase the speed, so it'd be 15 to 16 days, or you double the price. So again, getting a little off track, but it's kind of important because it's one of those charts that I can actually show you. Sometimes you have to go back so far in history to show you something that doesn't make sense to you logically. But this has just happened, right? So now again, this will be double the speed at the same time. I'm trying to get the objective, right? Simple. So it'd be up here. But again, it would be 2034. Oops. Something like that, right? So again, I'm screwing up my chart, but either you double the price like we did here, or you increase the speed of the timing, right? So again, if it's 31 days up to here, it'll be 15, 16 days, and it'll be, again, that's mathematically equal, right? For every action is equal but opposite reaction. So now either in time or price, Gann used to say that for every day equals 1 point. So again, just to kind of give you how I look at things. So again, potentiality, right? So again, we're looking at 40%. from low to high if this doubles this time and keeps the speed at the same. Let me Right, so we doubled this swing speed. So this is the objective. If it doesn't go faster in time, then it's going to probably, the potential is to see this as the high come June 2nd. Now that's if it isn't just a chopper, right? That's if it's fundamentally has changed. All right, let me move on. I kind of stuck on that way too long. Here is the orange juice. Let's look at a spot nearby. Again, just a chopper. Currently, the spot chart is now on July. That's what we're trading on the matrix. But you can see what it did. Just kind of in the middle of no man's land. Here is the crude oil. Again, a big bar down today. Basically, we're within this range still, and that's kind of where, I call this the money bar. Actually, it was 2 bars, but it happened so fast at the overnight sessions, right? So this money bar, this swing, this money swing, is in control. We're just within it. No big power up or power down until that occurs. This is the support though, where the 2 eclipses are. So if you're hedging, right, crude oil, and you're wanting an objective down a ways, well, obviously you got some here, and this would be an area of support to bail on or buy calls against your hedges, that kind of thing. Especially you can trade crude at 10 years out in the future. They do have what's called strips, right? So you can do a strip. Anyway, I don't want to get too into that, but because only one people that are making sense that are trading this at $12,000 margin is the hedgers, right? They need to hedge. Jesus, you should be hedging a year out, 2 out, 3 years out in the future on this pop. I guarantee you the big boys are, because they created the move. Nat gas, dud. I think it's going to trickle down, continue to make new lows, and then at some point fire up in the late summer probably. Here's the S&P again making a new high. The Trump effect's in full bloom. I just think we're it's only up 6% for the year, so it's not like it's massive compared to some of these other markets, right? So, but the stocks individually. AI is continuing as an, S&P is an index, right? So AI is continuing to outperform people's thought patterns for good or for bad, but definitely some new businesses have been created from AI, which again, AI is not new. It's just new to us, right? A lot of the history was written by AI back in the day. It's no different than fighter jets. You see them now, and it's like that's technology from 20 years ago, 30 years ago. That's the same way with AI has been around a while. Just that the public's finally getting to use it because it can fit on your phone. Here's the euro. Again, resistance up here at the 2 eclipses. We are still looking at a spot chart. What the heck happened there? Oh, anyway, there's the gold. This is the daily. Again, you can see the resistance up here. I need to look through. Let's look at silver because a lot of people do their stacking and stuff on silver. But you can see we had a 1, 2, 3, 4, 5, 6 leg decline. And then you can see that we're spreading it out now. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. I'll just draw a line in here. 15 days, went up 51%. And so now we're going to look at 15 days as a cycle. There is 15 days down to the low, and that is 36%, right? So again, this is, and 6 was your big one, so all these cycles are important. Now let's go forward into the current. Damn it. So again, it kind of missed this high. Again, 15 days is the deal. This one is 18. So, and now you got to assume 18 could be a potential also. So there is 18 back down to here, or no, that's 15. So again, 18 could be, May 11th or whatever. So that's kind of the cycle work, simple stuff, right? Yeah, I don't know. Just now, again, if you take the speed of the decline, I'm just getting so far off track here. If you get the speed of the decline to the low, and again, I'm using this as my pointer, which is again your downtrend angle, and I'm squaring that out so that I'm trying to do both. And you can see that it's basically squared out this to this low and hit this high, right? So again, that's the squaring of this small range to this from high to low. This is where it squared it out time-wise. So again, it did pick that high. Again, all said and good, and in 33 market days, which is my deal. I love 33 market days. 66 is the full sequence of the matrix. So this is half. So it makes sense a little bit. Since I'm so off track, let's run the see how many days we are. So it's 33 from the high. There is your, so it was a little longer than that. Now let's go out to 66. Let me get rid of these. I am so far off track, off the beat. You're seeing me do this live, so 66. So we have completed the matrix sequence from the high. Now, normally I do it from the eclipses, but again, it does work from the highs and lows as well. So again, it makes sense a little bit that we have completed the matrix, the bear market from the high, and it was a secondary event. And so now if we power up, it makes sense quite a bit actually. That again, when I look at things, I mean, we had 15 days up here, and a little more 15 here, and then we're kind of running through the time cycles on a sideways chop. We're not getting the violent pops, but again, the margin was at 63,000 and now it's 44,000. Still pretty high. Funds were trading thousands of lots back last year at this time, and now they're trading several, one maybe. That's it. They can't. No one can afford to trade these higher margins. So, cash does not matter in this sequence and chart stuff. Anyway, I'm off track. We'll carry on, but we did complete the matrix sequence, 66 down from this event. Now, I can't quit. I got to keep going. So here is the high, here's the solar, right? This where I'm at, that little arch down there is the solar eclipse, and a 66 sequence, and these will be on all markets, by the way, not just silver, right? So this is 66 market days, which is May 21st. Now that'll complete the sequence from the eclipse. So that's when all bull market projections will be looked at, or bear market projections, right? If it was a high during that time, that's when I would be considered, and Gann would have considered, the potential. That's the time, right? So he'd be looking at that to exit. Of course, he would have looked at 33 and 44. Now he did it basis calendar time because they didn't have all these holidays that we have nowadays. So anyway, keep those dates in mind. We're completed the from high yesterday, again, which was May 5th. And the date, by the way, was, I'm so far off track. I'm just going to complete my thought here. So we know those zones, right? And here is the 29th was the high. So now you look at every 29th, right? Kind of a annular on a monthly basis. And this is the 29th right here, right? So again, just for future reference on any of these, you're looking at the 29th. Well, okay, you go out another 29th. Basically the end of the month, right? It was right here, kind of this little coil bottom. And then the 29th was right here again on this bottom right here. This is the monthly annuals from that high date. Now this one obviously was important too, which was the 6th, right? So you look at all the 6s. There was one right here, kind of no man's land. And here is the 6th right here. And this is the 6th today, right? So again, pretty important. Now, of course, we got another lower low, which is the 23rd. And so on and so forth, right? But that's kind of how Gann used to understand where the acceleration points are going to be. And all these major lows throughout time are just as important. But when I squish this chart down, you can really see the impact of those highs, right? We dropped 50% down here, so pretty important, right? Now we know that this is the old highs, and we know that tendency is to drop at least 75 to 87% in that zone. So the projections are right around this old eclipse here. So I don't know if it'll do it quick or slow, or maybe we'll go up and make a new high first, right? Because again, why? Because we have a bear trap right here. Now we don't know this trap is good yet, because again we failed and we have to make a new swing high. So and this is the current swing that'll probably, to me, tell me that this is a trap. And then I'd be looking at areas like this and maybe the new high area. Again, the mathematics are still pointing to 140 to 180. I like 140 better. But yeah, that's in a nutshell. Oh, I just moved my line. Dang it. In a nutshell, though, that's kind of where we're at. We completed the matrix off the high. So, and any market that had a high or low on the 29th is completed. So, all right, let's move on. Cattle. Again, new highs on the nearby, and also on the December, right? So again, you're making new highs, and it's speeding. The corrective time zones are getting less, and the retracements are percentage-wise less. So it's telling you that it's about ready to maybe have another big pop, um, or it's pinching, right? It's an ascending triangle basis this. So again, the speed pop it could be occurring at any time. Let's go on. Let's go to Bitcoin. Again, this is the June chart, and you can see, let's go to the day. Let's go to the spot. There again, dropped 52%, squaring out of that, 53, I guess, from the high to this low. This is the kind of squaring out of the range. And yeah, let me see. This high was October. Let's just run. There is 66 market days over. You can see the speed, right, was projecting. Again, this is the pointing area, right? The little red dot at the barrel of a gun, that's what this, and so I use this as best I can. And then we know this was a low. And so, again, you're kind of looking for, there were 66 market days. And there was 69, because again, now it's hitting it perfectly. Your barrel is lined up, and it projected this high. A little off on time, but no big whoop. So that, again, completed the sequence, and now down we went for another leg. The speed of this incline is pretty important, right? This is your money swing. So we're within that, just kind of chopping around. Now, the bullishness to it is, as long as we stay above this low, I'll be kind of friendly. The Bitcoin, as long as we stay above this low, and we're kind of above it here slowly a little bit. Really, though, if you take this swing average, this is the area of true resistance. But this gap that we held for a while, we're kind of into, which again, uncovered close right here at 84,105. Today's high was 83,215. So we're not quite there yet. We talked about, I said last video, if we pick this bottom, if you pick this bottom, this is an objective, right? Fill in the gap, maybe the uncovered close. So anyway, that's it. I'm going to sign off. Again, I know kind of rambled around and him-hawed around. I like to teach people a little bit of my knowledge. I know I'm not perfect. I'm not an AI robot. So, but 4 or 5 decades. If you have any comments, I'll try to read them. I'm not a promotional guy, but if you have any comments on a market that I can pull up on bar chart. I had one guy ask me about REROD, which is the largest market in the world. Like, I have no freaking idea about REROD. So anyway, you make a comment and let me know what maybe a market you might want to dissect a little bit, and I will look at it, and then we'll have a video on it. All right. Again, the next moon period is again the weekend, so be a little cautious. Again, don't get too crazy, taking too big of positions home. Use options if you can. All right. Have a good one.